Welcome back to Indianomics. The Mohanty Committee has made some marginal and some sweeping suggestions to the way the Reserve Bank operates in the market. It has suggested that only the repo rate should be the signalling rate and that the monetary system should always operate in a deficit or almost always operate in a deficit. The other big decision or suggestion they have made is that the government's surplus cash, which it deposits with the Reserve Bank, should be auctioned so that there isn't this lead and lag in liquidity. To discuss some parts of the Mohanty report, we have with us ANJAN BARUA, the Deputy Managing Director of State Bank of India, and SRINIVASAN VARADARAJAN of Axis. Gentlemen, thanks. Mr. BARUA, let me come to you first on this issue. Do you think that this suggestion of one signalling rate, while it is a good one, is it really operable? Can we always operate in a deficit mode so that, the reverse repo rate is not that relevant? Is it really possible when, there is always this danger of capital flows?
Well, I think the committee has stated very clearly that in case of capital flows that we are all anticipating and which will lead to a surfeit of liquidity, that they have certain measures in mind, like our market stabilization bonds and raising the CRR. So many other instruments are available to Reserve Bank of India. But if I go by the experience that we went through for the last, say, 3 years, that is, say, 2008, 9 and 10, what Reserve Bank is saying that the system should basically operate in a deficit mode makes a lot of sense. Because we have seen during this period periods of excess liquidity, periods of extreme tightness in liquidity, but in the balance, the in case there is too much of liquidity floating in the system of adverse selection of assets comes into play when the too much cash chasing assets, and that is a very dangerous thing to happen in the system.
Okay. No, I agree with you that that is obviously the international best practice. Normally you do operate in a deficit mode.
And therefore, the repo as a signaling rate, policies rate, I think makes a lot of sense.
No, that point is taken. But Srini, if you can come in on this, it is certainly the best practice to have only the repo rate and operate in a deficit mode, and for an obvious advantage that Mr. Barua is saying. But is it possible? Even now, after a brief scare of a current account deficit issue, we have the Reserve Bank itself saying that no, we are going to be in surplus. We are going to be comfortable on current account deficit. It clearly looks that capital flows is an issue, at least for the next few years we can't dodge. So should the RBI give up that freedom to increase the corridor? While one rate is great, that should not RBI keep it in its arsenal?
Yeah, I think if you look at the report, I think if you leave out the thing of having a bank rate as a discount rate, I think basically what it's saying is that you have a loft corridor which is 100 basis points wide at all points of time. I think all of us know, or over the last many years we've seen, that our swings in liquidity are very large. Yes. And if you look at inflows as well as outflows, it can be very, very bunched up. So it's for example, advanced tax which we had just now. So if you imagine that you were in a deficit mode, you were in a surplus mode for some amount of time, and advanced tax is coming, it is not very easy to suck out liquidity when an anticipated outflow is there, which is reasonably large. So I think the theory of having a single policy rate is good. The repo rate works very well as a signaling device, because in deficit mode you're able to achieve much more than what you would in a surplus mode. But keeping it there at all points of time with the instruments which RBI has is possible, but whether at every point of time they'll be able to do it or will want to do it is a question of monetary conditions at that point of time, which I believe may not necessarily be the case at all points of time.
So the Mohanty Committee is setting too high a bar for its own central bank?
No, I think it's an ideal situation. But whether you would actually want to do it at every point of time, we've been conditioned over the last 6-9 months to believe that this repo rate works very well, which is very true. But if you go back 2 years and see the sort of liquidity conditions, and whether you will be wanting to withdraw so much liquidity to pull it back into deficit mode is not something which I'm at this point of time feeling comfortable that RBI would like to do.
Exactly. Yeah.
So and if you look at a reverse situation where, if you look at last 9 months when RBI moved from reverse repo to repo, it worked very well for them because they were in a tightening cycle. Yes. But when you are actually in the exact opposite mode, when you want to actually loosen monetary policy, exactly after the Lehman crisis or something like that, you would want to do the step jump on the other side to try and indicate that the policy rate is there, because it achieves the speed at which you achieve your policy rate move is much higher. So I think that flexibility which the LAF had, I think we still need to have.
Yeah, and you know, those who want to support the Mohanty report would say that layman is an unusual period, but you know, we perhaps will have to keep those options also open. I guess the Reserve Bank can also say at that time that we have decided that this is an unusual situation and the corridor widens. But your point is taken. Mr. Barua, the other seminal suggestion, important suggestion that Mr. Mohanty is making is that the government's cash, surplus cash, which it deposits with RBI and which created so much havoc after those 3G licenses were auctioned, that cash balance should be auctioned. How do you think that will work?
In fact, we have been discussing internally in our bank as to what will be the operative guidelines for that. I think the Reserve Bank of India and the government will have to sit down and work out the modalities. Will it be just an auction based again on a certain corridor, or it is a free-for-all auction? Whether at the time of auction, when the government gives us the money to, say, State Bank of India, do we have to give securities for that? Is it just a clean auction without any underlying collateral? All these things will have to be worked out. And mind you, there is also the the standing facility is also available. Exceptional standing facility is available. So that also has to be exhausted before people would like to go in for an auction mode.
Okay, what's your take, Srini?
And it also presupposes that at a time that...
yes, please go ahead, sir.
Excuse me, I'm sorry.
No, please go ahead.
At the same time, I was under this thing that I was just saying that, you know, it also presupposes that at all times the government balances will be in surplus mode, which may not be the case. It is, last 6 months has been quite exceptional.
Okay, yeah, I mean, I guess the facility will not be used when it is in deficit mode and when the government is not depositing cash. But your take on the surplus cash itself, it removes leads and lags.
No, I think the important point there is what Mr. Barua was saying. I think it's unlikely that this auction would be a clean lending. It will be again collateralized by something which I presume is going to be government securities. So you have a standing facility already there for some portion. And if you are going to auction out government balances against collateral, which is almost the same, I don't know. I mean, I'd be very glad if we can come out with something which is other than what we have against government securities.
What if they extend it to oil bonds and SLR, you know, non-SLR, but say state government loans?
Yeah, it's something which we can look at, but again, we need to see. Meaning, what I'm saying is, it's not so widespread. Oil bond holdings are not so widespread. It is with participants possibly who are non-banks. So, to that extent, auctioning of government balances, if you're going to do only with banks and primary dealers, if the holders of those bonds are not those entities, so we'll need to see how much of the liquid infusion can be possible.
So, as of now, you suspect it won't make a seminal difference?
No, we need to see the scheme. We need to see the scheme, because I would assume that it is going to be collateralized by something. Clean lending by RBI or the government to the market is not something which I would believe is possible.
On the flip side, I mean, it just occurred to me, how would Reserve Bank respond as a banker? I mean, Reserve Bank was giving a free overdraft to a government because they were keeping their cash with Reserve Bank. If they are not keeping their cash with Reserve Bank, should not Reserve Bank also charge a penal rate to a government when it borrows, Mr. Barua?
Well, I think that's between the government of India and the Reserve Bank, because I don't like to comment on that, because if I make a suggestion that penal rate has been charged, then tomorrow RBI may charge State Bank of India and other banks.
All right. On that note, thanks for joining us, Mr. Barua and Srini. That's an interesting discussion, and I'm sure we'll have more of this on the Mohanty report, though clearly it's going to tighten and render the entire market operations of the Reserve Bank more efficient. With that, we conclude this edition of Indianomics. Thanks for watching.